Welcome back to another episode of Borak Bersama Maybank. We finally wrapped up the first quarter's earnings season for 2024, and I have to say, just glancing through our latest report, the overall performance of the stocks under our coverage is looking pretty positive. So here to break down the results with me today is a long-time guest of the show, our regional head of Equities Research, Anand Pathmakanthan. Welcome to the show, Anand.
Hi, thanks for having me.
Alright, so let's start with a general overview. Could you help us break down the performance of the local stock market sectors? Basically, just highlight the ones who have performed well and the ones who have underperformed.
Sure, so it was a very good quarter in terms of earnings delivery for the market as a whole. So when you look at the core earnings of our research universe, it expanded or grew year on year for the fourth sequential quarter, which is quite rare, 4 straight quarters of growth. And the momentum is very strong. We are talking about double-digit year-on-year earnings growth. So what are the numbers? For the first quarter, core profits rose 20% year-on-year for our universe of stock coverage. And this was driven by almost all sectors, except petrochems and technology, which saw lower year-on-year earnings. Now, if you ask me which sectors stood out, on the positive side, we would say construction, gaming, non-bank financials like insurance and Bersama Malaysia, as well as aviation were the positive surprises. On the negative side, we had sectors like plantations and petrochems being relative underperformers when it came to earnings delivery.
Okay, so we've also realized that we have raised our KLCI target. It was previously 1,610. I think we gave it a 70 points upgrade to 1,680. So what are some of the catalysts for this bump?
Sure. So the big catalyst is what I was talking about before. The outperformance in first quarter earnings has caused us to revise upward our estimates for many stocks. So about 30% of our stocks saw upward earnings revisions in the first quarter, and only about 15% saw downward revisions. So you can see net, we have raised our earnings forecast for the market. So now we estimate about a 15.6% earnings growth for the market based on our coverage universe in 2024. If you just look at the KLCI, we're talking about 13% year-on-year growth. Now this compares to 11% before. So you're talking about a 200 to 300 percentage points increase in our earnings forecast. For 2025, we're looking at about a 10.5% growth for our universe of coverage in terms of earnings, and about 10% for the KLCI. So, to make it very simple, we're talking about double-digit growth this year and double-digit growth next year for market earnings. So that's a very powerful driver for our target price upgrade for the KLCI. But we don't think that's the only reason. Earnings, of course, is a big part of our optimism and our increased KLCI target. But there are other catalysts as well that we think our clients should be aware of. One is we do expect interest rates to start being cut more aggressively in the second half of this year across the world, of course led by the US Fed. On a local front, we expect more catalytic developments like the Johor Singapore Special Economic Zone. That one we expect news flow in the second half to be quite positive for FDIs and also infrastructure development. And also, the second half you see a much stronger performance by the ringgit. The ringgit has been a big underperformer for most of the first half of the year. But in the second half, we do see a positive reversal, and that will increase the US dollar returns for investors if they do invest in the Malaysian market. So for all those reasons, we have upgraded our KLCI target to 1680.
Okay, great. So lastly, since you mentioned that earnings have been upgraded here and there, let's talk about the individual stocks. Given the catalyst that you mentioned just now, are there any changes to our top buy list?
Yeah, so as I mentioned before, we have upgraded earnings for about 30% of our coverage over the course of the last reporting season. And in terms of our upgrades and downgrades, stocks-wise, we upgraded 5 stocks to buy. Those were CapitaLand, Press Metal, Sime Darby, Tabun Indah, and Ta'an. So those all went from hold to buy. And we only had 5 downgrades, of which only 1 was to sell. So we downgraded Icon to sell, but we also downgraded Hibiscus, In Nature, Sunway, and Wesco to hold from buy. So many of these downgrades were due to limited upside to target prices rather than any big earnings miss. So giving you that backdrop where generally we've upgraded more stocks and downgraded more stocks, we have made some changes to our top picks portfolio. So for our top buys, we have added 8 stocks and removed 8 stocks. So the stocks we've added is Sime Darby Guthrie, previously known as Sime Darby Plantations. We've also added Sime Darby itself, Gamuda, Dialogue, Top Glove, MyEG, AirAsia X, and our recent new coverage, SAM Engineering. So these 8 stocks have been added to our top buy stock list.
Alright, thanks so much Anand. Aside to the audience, you can catch our latest report and many more trade ideas on the all-new Maybank Trade MY app. Remember, if you do not have a CDS or trading account, you can apply for one in just 3 minutes via the QR code on screen now. If you need a more human touch, you can also approach our sales representatives and they can help you get started on that as well. With that, we'll catch everyone in the next episode, but until then, this is Ben on behalf of Najib Hussain and Maybank Investment Bank, signing off.